Hey moneymakers, it's your man Jim here to help you navigate the wild world of personal finance. Today we're talking about making your money work as hard as you do. We're diving deep into the battle of the savings titans, high-yield savings accounts versus money market funds. That's right, folks, we're talking about parking your hard-earned cash where it can grow faster than bamboo in a rainforest. We're not talking about getting rich-quick schemes, those are for suckers. This is about smart, strategic moves to build your financial fortress brick by brick. Do you want your money to work harder while you sleep? High-yield savings accounts or money market funds? Which one should you choose to grow your savings smarter in 2025? Stick around because in just a few minutes you'll have a clear answer. First up, let's talk about high-yield savings accounts. These accounts are designed to offer you a higher interest rate compared to traditional savings accounts, making them an attractive option for those looking to grow their savings more efficiently. These are the workhorses of the savings world, the reliable pickup trucks of your financial portfolio. They might not be the flashiest option out there, but they are dependable and get the job done. They're not flashy, but they get the job done. You can count on them to steadily grow your savings without much hassle. You know the drill. You deposit your money, the bank pays you interest. Simple, right? It's a straightforward way to make your money work for you. But here's the kicker, folks. We're not talking about those measly interest rates offered by your grandpa's bank. We're talking about something much more rewarding. We're talking about high-yield savings accounts. These accounts offer significantly higher interest rates, making them a smart choice for anyone looking to maximize their savings. These bad boys offer interest rates that'll make your head spin, often 10 times higher than your standard bank savings account. That's right, 10 times. Imagine the difference that can make over time. Now, I know what you're thinking. Jim, is this too good to be true? It's natural to be skeptical. But let me assure you, these accounts are the real deal. Listen, I wouldn't steer you wrong. High-yield savings accounts are a legitimate and effective way to grow your savings with minimal risk. These accounts are FDIC insured up to $250,000 in the US. This means your money is protected by the federal government, giving you peace of mind. And CDIC insured up to $100,000 in Canada. So whether you're in the US or Canada, your savings are secure. That means your money is safer than Fort Knox, even if the financial sky starts falling. You can rest easy knowing your savings are well protected and the benefits don't stop there. High-yield savings accounts also offer flexibility and convenience. With high-yield savings accounts, you get easy access to your money whenever you need it. No more worrying about lock-up periods or penalties for withdrawals. No lock-up periods, no penalties for withdrawals. It's your money and you should be able to access it whenever you need to. It's your money and you're in control. You can manage your savings with ease and flexibility. Plus, there's minimal to no fees with these accounts. This means more of your hard-earned money stays in your pocket. We're talking about keeping more of your hard-earned cash in your pocket where it belongs. Every penny counts when it comes to building your savings. High-yield savings accounts are perfect for an emergency fund, that financial safety net we all need, or for short-term goals like that dream vacation you've been eyeing. They provide a safe and effective way to save for the future. But hold your horses, folks. Before you go all in, there are a few things you need to consider. Before you go all in, remember that even high-yield savings accounts have their limitations. They are not a one-size-fits-all solution. While they offer a fantastic way to grow your money safely, they might not be the best tool for outpacing inflation in the long run. Inflation can erode the purchasing power of your savings over time. Think of it like this. High-yield savings accounts are like the tortoise in the race against inflation, slow and steady, but not always winning. They are reliable, but may not always keep up with rising costs. However, for short-term goals and peace of mind, they're tough to beat. They offer a secure and flexible way to save, making them an excellent choice for many. Now let's shift gears and talk about money market funds. These funds are a great way to start your investment journey without diving into the deep end. These are like the sleek sports cars of the savings world. They offer the potential for higher returns, but with a bit more risk. Imagine the thrill of driving a high-performance vehicle, but in the financial realm. Don't worry, folks, we're not talking about high-stakes gambling here. It's more like a calculated risk where the odds are generally in your favor. Money market funds are low-risk investments offered by mutual fund companies. They are designed to provide a safe place to park your cash while earning a bit more interest than a regular savings account. They pool your money with other investors' funds and invest in short-term, high-quality securities like treasury bills, those IOUs from the government that are as good as gold. These investments are typically very secure and provide a steady return. Now here's where things get interesting. While the returns are not guaranteed, they tend to be higher than what you get from a traditional savings account. While money market funds aren't FDIC insured like high-yield savings accounts, they offer the potential for higher returns. This means you could see your money grow faster, but there's a trade-off in terms of security. Remember those measly interest rates your grandpa's bank offers? Those rates are often so low that they barely keep up with inflation. Yeah, money market funds laugh in the face of those rates. But wait, there's more. They also offer a level of flexibility that many other investment options don't. Money market funds also offer liquidity, meaning you can access your money relatively easily. This is a huge advantage if you need to get your hands on your cash quickly. It's not as instant as a high-yield savings account, but it's a heck of a lot faster than selling stocks or bonds. This makes them a convenient option for many investors. And here's the cherry on top. Money market funds can be a slightly better hedge against inflation compared to high-yield savings accounts. This means your money has a better chance of maintaining its purchasing power over time. Remember that tortoise we talked about earlier? The one that moves slowly but steadily? Well, money market funds are like a slightly faster tortoise. Still not winning the race against inflation, but at least keeping pace. They offer a balanced approach to growing your savings. However, before you go all in on money market funds, remember that they're not entirely risk-free. It's important to understand the potential downsides. Unlike their FDIC-insured counterparts, money market funds can fluctuate in value. This means that while they are generally safe, there is still some level of risk involved. It's rare, but there's a slight chance of losing money during extreme market downturns. This is something to keep in mind when considering your investment options. Think of it like this. Money market funds are like driving a sports car with a really good safety rating. It's exciting and offers great potential, but you need to be aware of the slight risks involved. It's still exhilarating and potentially more rewarding, but you need to be aware of the slight risks involved. So as you dip your toes into the investment waters, consider money market funds as a viable option for balancing risk and reward. Chapter 3. The million-dollar question: high-yield savings or money market fund? So, we've covered the contenders, the heavyweights of the savings world. High-yield savings accounts and money market funds are both excellent options, but they serve different purposes and cater to different financial needs. Now, the million-dollar question: which one is right for you? It all boils down to your financial goals, risk tolerance, and how quickly you might need access to your funds. Don't worry, folks, I'm not going to leave you hanging. Let's break it down so you can make an informed decision. Here's the cheat sheet, the bottom line. If safety and easy access to your funds are your top priorities, go with a high-yield savings account. High-yield savings accounts are like parking your money in a secure vault with a decent interest rate, boring but effective. They are FDIC insured, meaning your money is safe up to $250,000. It's a great option for your emergency fund or any savings you might need to access quickly without worrying about market fluctuations. But if you're comfortable with a tiny bit of risk for potentially higher returns and you don't need instant access to your cash, a money market fund could be your golden ticket. Money market funds invest in a well-diversified basket of short-term, high-quality securities, a bit more exciting with the potential for greater rewards. They are not FDIC insured, but they offer higher interest rates compared to traditional savings accounts. But here's a thought: why not both? Diversifying your savings can give you the best of both worlds. That's right, folks, you can have your cake and eat it too. Consider using a high-yield savings account for your emergency fund, that financial safety net we talked about, and a money market fund for your short-term investments. This way you can enjoy the security of a savings account while also taking advantage of the higher returns from a money market fund. Diversifying your savings strategy is like having multiple streams of income. It spreads your risk and maximizes your potential for growth. You can sleep easy knowing your money is working for you in different ways. Remember, folks, in the world of personal finance, diversification is key. It's not just about how much you save, but also how you allocate those savings. So there you have it, the lowdown on high-yield savings accounts versus money market funds. Both have their merits, and the best choice depends on your individual financial situation. Now you have the knowledge to make informed decisions and watch your money grow. Take the time to assess your needs and choose the option that aligns with your financial goals. With the right strategy, you can achieve financial security and growth. Happy saving and investing. Thanks for watching Smart Money with Jim. Don't forget to check out our other videos for more money smart tips. Got questions or suggestions? Drop them in the comments below. And hey, if you learned something new today, give this video a like and share it with someone who needs it. Until next time, keep making smart money moves.